Yeah, so this is a big year for tax reform. What are some of the top issues that business leaders should be aware of?
Well, it certainly has been a very hectic year of reform in Australia's tax system. From the start of this year, we've seen the government focused on implementing strategies that both provide incentives and encourage businesses to go out and spend and stimulate the economy. But we've also seen the government follow through on a number of major reform areas that we've been waiting for a number of years. Some of those reforms include how the financial arrangements and the financial services industry is going to be taxed in the future. There are some reforms that have been in the pipeline there for about 10 years that we've all been very eager to see the completion of, and thankfully we've seen those come through in the last few months. Other changes announced by the government in recent months include changes dealing with employee share schemes and the foreign income exemption, and other reforms dealing with the treatment of private loans by smaller companies as well. So it certainly has been a hectic pace of reform, and I think that pace is going to continue for a little while forward.
The Institute has been on the public and the private record on the issue of employee share schemes. What's the latest news?
Well, the changes announced by the government in the federal budget this year were quite significant. From day one, the Institute took a leadership position in putting forward to government not only the concerns that we had with the breadth of the changes and the potentially devastating impact that it would have on the future viability of share schemes, but we took a proactive role in advising the government on what other solutions they could implement, what other solutions would able to be delivered through businesses which wouldn't have a devastating impact on the viability of share schemes. And that's something that we took up with government straight after the budget. The latest update is that the government has revised its budget night policy decision, and it's put forward a new position which basically goes a long way back to where we were before the budget night announcement. We put forward solutions to the government which not only delivered the government's objectives of improving integrity and compliance in the use of share schemes, which was their main concern, which sparked their budget night announcement fundamentally, but we put forward solutions also which allowed businesses to be able to continue to offer employee share schemes to their staff, which is really vital, not least of which in the current economic climate where it's important for businesses to be able to reward their staff and provide them with added incentives for them to remain in their employment. But it's also important for the community more broadly. The more that employees are able to build up their own wealth through things like employee share schemes, the less of a burden they will place on the broader economy and the community in future years. So the Institute's position on the employee share schemes issue was quite important, and we're quite pleased with the government's new announcement.
You mentioned that foreign income exemption is a key issue that the Institute's been discussing with government. Why is it so important to a competitive business environment?
The policy around allowing Australian resident employees to move abroad and continue to be exempt from Australian income tax is a really important part of our tax system. It's an important part because it allows the benefit of Australian employees to move abroad and to gain experience from offshore and bring that back to Australia. And it allows the opposite as well. It allows Australian employees to move abroad and take with them the Australian skills and the Australian experience, which we know is highly valued in overseas jurisdictions. The changes announced by the government in the budget this year mean that those exemptions and that policy position that the government previously had is being changed. And the fundamental implication there for business is twofold. One is that it potentially jeopardises the ability of Australian employees to move overseas. The costs of them doing so, the costs to them personally and the costs to their employers, the businesses, will be significantly increased in many cases. That's a challenge for businesses because it means on a global competitiveness level, their ability to compete with overseas countries and their ability to compete on a level playing field is going to be significantly impacted. The second implication is that it means that for some businesses they will find it difficult to retain the best and brightest people. There may be an incentive now in the way our tax system operates by removing this exemption for those employees to move abroad permanently and stay away from Australia rather than bringing back those skills into the country.
What opportunities are there for businesses to take advantage of in the current environment?
The opportunities in the current environment are really interesting for businesses. Some might say that the downturn brings with it some adverse implications, and I'm sure that's the case in some situations. But it's really important for businesses to look at the upside, the potential for them to to get their house in order, the potential for them to improve their corporate governance around how tax is managed within their organisation. That's a really valuable opportunity and something which companies typically find it a challenge in strong economic times to devote enough time and resources to. In times like this, in challenging economic times, it might be exactly the right sort of process to go through, which has downstream effects in the future for those businesses by allowing them to minimise their level of risk exposure to the ATO and to future compliance activity. Some of the other opportunities that it presents for businesses include being able to access some of the temporary incentives that the government has put in place in responding to the current economic climate. So things like the investment allowance, which is something which is a feature of our tax system for the time being, right up until the end of this calendar year, which normally isn't available to businesses, a one-off tax break, if you like, to provide them with an incentive to invest in new capital, new plant and equipment, which again funds and assists those companies in operating in future years. So there's certainly a number of opportunities around temporary incentives to do with the investment allowance and the ability of businesses to improve their corporate governance around tax risk management.
Do you think the current conditions will affect the anticipated positive outcomes from the Henry Review?
Well, what we've heard from Dr. Henry over the last few months is certainly a commentary from him that suggests that the current economic climate is not going to limit his ability to put forward recommendations to the government that are in the country's long-term interests. There was some concern from the business community, and rightly so, that the budgetary position for the government would present a challenge for Dr. Henry and for Treasury and the government more broadly in making decisions about the structure of our future tax system. What we've heard from Dr. Henry himself, the person who is ultimately responsible for putting forward the recommendations to the government, is that the current economic climate is not going to jeopardise his ability to put forward long-term reforms that are aimed not just for the next year or two, but reforms that are aimed at the next 5 or 10 or 15 years that are ultimately for the benefit of Australia's future economic competitiveness and the simplification of Australia's future tax system.